Good morning, everybody. Welcome to the game plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. And of course, I'm here to give you the rundown of everything on a technical analysis basis, data-driven analysis, not the nonsense and the narratives, not the hype. This is all about the charts and the levels. Why is that important? Because it ultimately gives us a firm ability to make judgments, essentially using probability for positioning ourselves, myself, in trades either on the long side or the short side. So let's get right to it here, folks. Let's jump in. We could take a look. The S&P 500 is trading slightly higher this morning. The PCE data did come out. It actually came out exactly as forecast. So there was no surprise whatsoever here on the data. All right. So again, expectations for PCE were 2.6% year over year. That's exactly where it came out. Month over month was expected to be 0.3%, and that's where it came out. Now, the way you tell if expectations were met by the market for the data is you look at the candle. Was there any major move up or down after this data was released at 8:30? And we can see there was a little gyration, and we're literally going sideways at that point. That tells us there was no surprise in the data. The market anticipated, the forecast was correct here for these numbers. Now, again, many people will say, oh, but it's fake numbers and all this. It doesn't matter. And I always remind myself of that because I often think the numbers are fudged as well. But the answer is, if you're a trader or a swing trader, you don't care. Like, you're not focused on these fake numbers that will eventually be revealed in 20 years from now. Heck, I want to make money today. I want to make money this second on the market. And so therefore, I need to go with what the reaction is in the market. Always remember that, guys. All right. So let's take a look here quickly. If we go to the daily chart, this is something I'm watching. So we had the big gap down on Monday on the S&P. This is the Spiders chart, the tracking ETF daily chart for the S&P. And then we rallied the rest of the week. We had a small pullback on Wednesday, up day on Thursday, and we are trading up on Friday. Couple levels that I'm watching very closely today. There's a gap fill right here at 607.90. We're very close in the pre-market to that. If we flip over to the intraday, you can see this is that line right there. See the yellow line? This line. So essentially pre-market, we are filling that gap. That will be resistance. So we're right up there. If we get through that today or next week, we start focusing on the double top line and the upsloping channel line. Let me extend it out a little bit more here so we can see. So this will be resistance. We haven't confirmed above it. We pierced and closed above. We never confirmed. As you can see, the market rejected it and it came back down sharply. This again has to be confirmed above. And if we do, we then look to this level as our next resistance, which is around 612 currently. 612, that's about 6,120 on the S&P 500. All right. So again, very clear what we have. And even if we take away this double top line right here, here was that parallel channel we were trading in. We kind of broke it, retraced into it, rejected, retraced into it, pierced it, never got above and confirmed, rejected. Now we're coming up into that. That will be a level to watch, and it would be anticipated to be resistance. All right. So again, keeping that very much in tune here. Okay, so that's number one. Let's go over to the Nasdaq 100. If we go to the QQQ, which is the tracking ETF, I have my lines here. Simplifying it, we have this trend line here. We have this trend line from this point back in August of 2022, connected to this high here in July, just before the August swoon. Then the high here as well. All of these aligning. And really what we're doing is we're just chopping here. We're just trading in the midst. So if we rally up today, gap fill right here at around 529.50. That'll be short-term resistance, followed by 533.75, this little pivot top, and then obviously double top at 539.15 or so. So those will be the levels, all right? But again, the big step is, are we making a bearish up move here for another leg down? We don't know yet, but it is something I'm watching very closely. I'm also keeping an eye on a trend line right here. There's a good trend line right there, and another trend line right in this vicinity that if we come into, this should be key support here in the near term. All right, so let's quickly take a look at the 10-year yield. Then we'll get into stocks that are moving today with trading levels. And you can see here yesterday what happened. We kissed the low end of this support level. The 10-year yield bounced off of it, and today is basically flat. So we're trading inside of this range. Upsloping trends like this, almost channels, generally they eventually break to the downside. But if I had to game this out and say what probability would tell us, it would tell us a little bit of a bounce like this, and then the bigger breakdown like that. Generally, you'll get a small bounce, and then the next wave of selling comes in. Doesn't mean it has to happen. That's just the most probable outcome. All right, let's look at the dollar real quick here. The dollar has been inching up. Just a few days ago, I talked to you guys about the potential that we could be forming a bearish pattern called a head and shoulder pattern. It's looking more and more likely. It still has not fully formed, but let's draw it in. This would be your shoulder and head, and then this again would be your shoulder over here, right? So again, very clearly we have a shoulder, head, and we're in the process potentially of making a shoulder over here. Now, again, the cool thing about head and shoulder patterns is that once they trigger, and let's talk about that. When does this pattern trigger? It triggers if the neckline is breached on a daily closing basis. So listen, it literally has to go up a little bit more, I would say, and then come down and close below. This is what's called the neckline. The neckline of the head and shoulders, essentially connecting armpit to armpit or shoulder to shoulder. The way you calculate the target, and this is one of the secrets that we've developed here, is that you take the highest point of the head, you drop a plumb line down to the neckline, and you expect a measured move from the break point there, which is interesting because you kind of have this trend line right in the same level area, right? This trend line here, which is basically parallel. These two lines are parallel, and that would bring you down to that level on the US dollar. Now, the big question we have to determine is this drop in the dollar because interest rates and money is getting printed? Is it because we're seeing inflation come down? Or is it because the economy is getting weak, which also could be in de-inflation or disinflationary, right? It could be the reason why the dollar starts coming down is because inflation is going down, which sounds great to us, right? It's like, oh yeah, inflation's coming down. But if it's because the economy is starting to crater into recession, that may not be so good, all right? So again, a little bit of caveats there. Ultimately, that's why I look at the charts, is because the charts don't care. They don't care the reasoning behind something. They don't think, oh, well, inflation's going to do this or it's going to do that or the tariffs will do this or that. All they care about is probability, and it gives us a high probability scenario if that forms. All right, let's get into some Apple earnings here. Apple, again, guys, looking at the charts here, Apple is up on the day. You can see it's trading right around 247. It shot up. I mean, this was wild yesterday. So let's just recap. So earnings come out. Earnings were okay. They beat earnings by a little bit, but the market anticipated that, and their iPhone sales were weak. The stock goes down. All right, trades as low as basically 233. Then in the conference call, they give a rosy picture. By the way, who else did this? Elon Musk. So initially Tesla, let's go to Tesla here. Tesla here on earnings right here, all right, dropped. And then Elon Musk said, oh, but don't worry, things are going to be great in 2025. So that seems to be the new way these CEOs are kind of making us feel better and keeping the buyers coming back. And the buy the dippers is their current quarter, and some of their sales numbers aren't so good, but they're saying, listen, guys, don't worry. I swear this next year is going to be fantastic. People are buying it. And maybe not myself, but people are buying it out there, and they're buying the stock. They're creating extra liquidity for smart money. Hate to say it, but I think that's what's going on here. All right. So anyways, going back to Apple, we got that rosy kind of outlook. Oh my goodness, maybe things will be better. The stock is obviously trending up here in the near term. But look at this. We have a key trend line here. Pivot low, kissed it here, tags it right through here, kisses it right here, and it's right up around this level here, right around 245 to 246 on the chart. So again, right now we're trading above this level, but let's see throughout the day. It would not shock me if price ends up falling back into the 245 to 246 or even below level by the end of the day. This is a big level here of resistance. In addition, just to show you something else, if we take our highest point, and I'm using my Fibonacci drawing tool here, and we take that point and we drag it down to the low, look at what we have right there. That's the 618 Fibonacci. All right, so listen, maybe we go up to the 786 up here. That's always possible. But this, again, the fact that this trend line is crossing this area around 245 to 246, that to me tells me that even though we're above pre-market, it would not shock me to see a sell-off at some point. All right, other stocks that are making moves this morning that are names that we are familiar with. Decker Outdoors is getting clobbered here in the pre-market. The stock is down about 15% after disappointing earnings. Again, if we look at the daily chart, so number one, I always look at where it's trading, right around 292, 293. Then I flip to my daily chart and I look at it and I zoom out and I say, wow, that thing was in the stratosphere. I mean, what were they going to report? A cure for cancer to generate further upside in the stock? You guys get my drift on that, right? It's like essentially it was priced to perfection. Really, really. All right, so the stock is falling. It's trading right here pre-market. There's a little gap fill at around 191. I don't like that as a trading level. I'll show you the level I like. So see this pivot right here? If you draw that out, look at what happens. It goes right to this high, and then there's a gap fill right there. That's the level I will be watching today. High pivot, little uptick right there, and then gap fill. 182-ish, give or take. That should be a good level. And by the way, some of these levels we talked about yesterday worked out amazingly well. We had Whirlpool. Look at Whirlpool, guys. I talked about the gap fill here and the Fibonacci 618. If you were tuning in yesterday to the game plan, I went over WHR. Whirlpool was cratering on earnings. And I said, guys, this is your first area right here at 106 down to maybe 103 here, 103, 104, the 618. This line is your 618 Fibonacci. This is your gap fill. Look at what the stock did. Goes right there and bounces. I mean, this is money. This is like being the Federal Reserve sometimes in terms of finding these levels and being able to print money. It's pretty cool, in my opinion. It's pretty darn cool. All right, in any case, that was very, very nice yesterday. UPS, let's take a look at UPS. Here's another level I gave you guys yesterday. Down-sloping trend line. And this gap fill, it didn't hit my down-sloping trend line, but look, there's your gap fill. Went a little bit below, and then boom, to the upside, it ripped. And by the way, we traded both of these stocks in the Apex Live day trading room for profitability or profitable trades. Because again, I'm using these levels to day trade every day in the Apex Live day trading room. I'm just giving you guys kind of like a sample of what we do in there. And obviously it's day trading. It's not for everyone. You have to kind of come in and see if it's something you like. But it's freaking good. It's good. I got a great group of traders in there. Ben, my head trader, my elite traders, Dr. B, and Drew, and our junior trader, Lawton. And again, we've had a nice month. I think we're net up on the portfolio about 7%, maybe more on the month. And so if you map that out for the year, it's pretty darn good, approaching 100% return. All right, let's go back to some other stocks making movements here. So we looked at Decker. We know our level on deck. If we take a look at WBA is cratering today. Look at this drop down to $10. They cut their dividend to zero. They got rid of their dividend. So listen, this was a stock that I was pounding the table as a January effect play coming into January. We got our pop. I cashed out with my members here of Smart Money Stocks. Boom, boom. Now, again, we're out because I don't get greedy, right? Greed is ultimately, in the old Wall Street movie, the term is greed is good. Not always. Greed makes you stay in too long. You have to know when to pull the ripcord. And that's very, very important here. So what we have on this chart, if we flip to the daily chart, we can see that this was that coming into December. We had the bull flag going into January. And then boom, from $9 to $13, incredible pop. And now it's coming back in. The level here, that's very clear. There's a gap fill at 920 all the way down to this line at around 820. So this could be a little bit of a day trade today. If it gets there, I think I would like it. But on a swing trade basis, somewhere probably in this lower range, around $8.20, I would start to nibble on a swing trade. And again, the whole idea here is they cut their dividend to zero because they're trying to conserve cash because they have a lot of debt. So they got to pay off their debt. They're trying to make this turnaround happen. They can't be paying out crazy amounts of dividends to shareholders when, needless to say, they need to use that money to get back on the right track. Another stock making a big move here is Team, T-E-A-M. Look at this pop on earnings yesterday. This is Atlassian Corporation. Big pop there. It is trending sideways the rest of the pre-market here this morning. If we look at this, it's trading at 325 or so. And what are we seeing here? So here we can see, again, there's been a general it's been off of its highs going back to the 2021 bull market. But where the heck could this go today? that I'd be interested in shorting it. So it's right around this area now. I don't like that. I would actually be more inclined right up here. There's a former gap fill here at around 350. I know that's still a long way away. It's still $30 away on the, well, 25 on the stock. That's not a crazy amount, but for safety purposes for me, and I can only speak for myself as a trader, I'm not going to get in on try to short this too early because this is a powerful move and it honestly could squeeze higher. If it gets to 350, I'd probably start nibbling on the short side, assuming it matches the criteria on an intraday basis. All right. Quickly looking at Tesla. Tesla, guys, is, again, in the pre-market. If we look at this, it is basically slightly lower, it looks like. The stock had that little bounce on earnings yesterday. I still have it going down to 360. I think, again, even the lack of big move on earnings yesterday, eventually this comes back in here. And then we have to see, maybe it breaks this level. But 360 is kind of my game plan for where I'm going to say, I'm in this as a short with members of Smart Money Stocks right now. And I'm going to look to take profits around that 360 level. Okay. Next up, let's take a look at a couple other names here. So next week, we have Google and Amazon reporting, or Alphabet and Amazon reporting earnings. This is going to be really interesting because, again, I've showed you guys this before. This is the Alphabet daily chart, topping tail, topping tail, topping tail. But, so those are bearish, right? Topping tails are bearish. But what type of pattern is this? It's an up move with bullish consolidation, right? That's a bull flag. So I'm getting mixed signals on this. And the key is this, guys, is that sometimes charts give you mixed signals. That's okay. What does it tell me to do? It tells me to sit my dang ass down and not get in a trade on it. I don't have a good enough read. When you get mixed signals, it's telling you that the probabilities are closer to 50-50. And so unless I get those 80, 75, 80% probabilities per my analysis, I'm not going to take the trade. Just going to sit on the sidelines. There's no need to force a trade. There's always another trade coming around the corner, as we always know. All right. And then Amazon, guys, this is an interesting one. I'm going to tell you why. If Amazon pops next week on earnings, I'm not sure which day they come out, to be honest, but it's either next week or the following week. But there's a major parallel. And if Amazon were to pop up into the high end of this parallel around 255, that would be my short right there. All right, that again to me would be a great parallel. Again, the lows and then using this highest point here, that would be an opportunity. Aside from that, I don't have much else of a signal here. There's kind of a mixed bag, just like Google/Alphabet. So again, it would need to pop into this level, and then I would potentially take that short trade. All right, let's go to Bitcoin here, guys, and go over our Bitcoin chart. Let me take a look at the Coinbase chart. Right now, Bitcoin is basically flat on the year, or on the day, I should say. We got that PCE data still showing up there. But this is my pivot line. As long as Bitcoin remains below this pivot line, the downside is the more favorable. If it closes above, then you're headed into this zone here, 108 to 111. But as long as you stay below here, notice how ever since I drew this in, low to the low to the low to the low, and then it got below, then you kissed it, you hit it, you pierced it, but you're still closing the day below it. That means it's having trouble there. Again, the charts just tell you that by the way it closes below each day. So watch this. Let's see what happens today. Does it end up pushing above and closing above, or does it stay below? Right now, based purely on data and probability, the probabilities are slightly favoring a downside move. Now, just news I was seeing is MicroStrategy raises another $565 million to buy more Bitcoin. Man, are they levering up? Amazing. They are just pumping out, raising capital left and right. Hopefully it works out for them. My biggest fear, again, is that at some point, Bitcoin has a history of 50% corrections or greater. If that ever happens, MicroStrategy is in a lot of trouble. But as long as Bitcoin just keeps grinding up and going higher, they'll be golden, and they will be essentially the Bitcoin reserve company out there. I mean, they hold a massive amount of Bitcoin. MicroStrategy's chart, by the way, taking a look, it honestly is just chopping here. In terms of a level, you want to see a level here. This is your level. You do not want MicroStrategies to close below this line at around 325, 326. If it closes below and confirms, it starts its next leg down. As long as it holds, it could trade up. You also have a trend line here, which is creating a wedge pattern. So this is basically telling us, wedge patterns tell us that price is being condensed and it may break one way or the other. And when it does, whichever way it breaks will probably be a big move. So very clearly, if it breaks here, down you go. If it breaks here, up you go. And my guess, that's on the back of Bitcoin making a move. All right. Gold made a new all-time high yesterday. Tremendous move on gold. It is continuing up. So we have all these old levels that were breakouts. This was the wedge pattern breakout. I did unload my GDX yesterday and my Newmont mining longs with members of Smart Money Commodities because, again, we were up significantly and I wanted to just take some profits off the table into week's end. But I want to show you this, guys. So I'm going to even remove this line. This is what I'm seeing here. This is a parallel channel, which tells us that if gold keeps rallying, this is your target. Look at where that target is. Let's say it hits, let's move this out. Let's say it hits by February or March. What level is it? It's $3,000. So we could, by March, it is possible we could see 3,000 on gold. Now, again, there's also a possibility it doesn't happen, but this parallel is very clear here. This is a beautiful parallel. And if we do go to the high end of the parallel, that's 3,000 on gold. Amazing action, guys. Absolutely cool. Silver did get its breakout. We were talking about how this chart was much more bullish. It is small, slightly lower today, but great move. Short-term resistance is going to be $32.25 to $32.30. Oil, I continue to hold half my short position on oil, looking for this as a short-term target. It's inching down today. This has been a great short. I love how consistently it's been falling. Again, I took half off either earlier this week or last week. I don't remember when it was, but when it was down right in this range here, half off, and now we're just waiting for that second target to hit to remove the rest. And remember, I'm a swing trader, so it doesn't really matter where I think oil is in 6 to 12 months. I think oil is honestly a lot lower in 6 to 12 months. But for me as a swing trader, I'll just reshort it on a bounce and just kind of rinse and repeat. Natural gas continues its move down. There's your parallel, and there's your breakdown. And so, again, understand your parallels. Parallels in general, 80% of the time, they break to the downside. You just don't know when. If you thought the parallel was going to break down here, you basically be only back to break even. It's important on parallels to really know when the break hits, and then that's when the bigger move likely comes in. All right, guys. So lots of awesome action, guys. It's been an amazing week. We've had, wow, I mean, we've had massive earnings. We've had the Federal Reserve. We've had all these other things. And my goal here and the verified investing goal is to just be data dependent, meaning that no narratives, no hype, no nonsense. No fear, no greed. It is what it is. We take the trades based on probability. That's what I do. That's what my team does of amazing traders here. And we just want to go out there and be a beacon of light to all the investors out there that are getting whipsawed on social media by the hype and the pumping, or the mainstream media with their talking up their narratives that they want to push. I just want you guys knowing that there's a place where data is the driving force. Data will take you through. All right. And again, listen, it will certainly and not be perfect all the time. It never is. It's essentially you just want to be the casino, not the gambler, right? The gambler in a casino, you play long enough, the casino wins. I want to be the casino. If I play long enough, I make money. Maybe not every time, but odds are they're in my favor. I do enough trades. I make X amount of winning trades for every 10 trades, let's say 8 out of 10 or whatever it is. That's the goal. You guys are awesome. I love you all. Thank you guys for supporting us. It means the world to me. Have a great one. You guys have a great weekend. I'll talk to you on Monday. Take care.